messaging for our viewers who are watching the show that okay, you look at market from point to point, which is April low to now, it's a double-digit rally. But if you stretch the timeline, maybe add in one more year, maybe add in 4 more, 5 more quarters, it's actually not a powerful rally, which means that there is no euphoria, there is no excitement, and there is no bubble in the market. That's the headline message number one.
Yes. Just to add, Nikunj, to that point and to the viewers as well, right? If you look at the Nifty mid cap and the Nifty small cap 1 year forward earnings, right?
This is FY25.
FY25.
Okay.
You are today trading at lower levels
Okay.
than October 21 levels for all the three indices, and we are exactly near 5-year averages. So you do the math, the 5-year Nifty forward and where we are trading today, we are at near 5-year averages. Now, if we believe that the next 5 years, our earnings growth, our return on equity is going to be worse off than the last 5 years, then it's a different question. But I think otherwise, right, the next 5 years could be better than what we've seen in the last 5 years, because last 5 years we've seen a lot of disruption, COVID and so on and so forth. I think we are not terribly expensive at all. We are trading at 5-year averages.
So let's do a maths here. If earnings are expected to grow in the range of about 12 to 14%, 12 being the base and 14 being the optimistic number, can one expect that in 3.5 to 4 years, which is simple rate of compounding, the Sensex should be close to 1 lakh? It may not be above 1 lakh, it may be just below 1 lakh, but there is a serious possibility and a probability that 3 to 4 years Sensex 1 lakh ho jayega.
I have no doubt, right? And again, when we talk about earnings compounding, Nikunj, we talk about the Nifty, right? Typically. My sense is that the broader markets, if you look at the NSE 500 or the BSE 500, my sense is that the broader markets earnings could compound faster than the Nifty.
Okay.
Because the Nifty has a lot of heavyweights and they may compound at 14-15%, but the smaller companies might compound faster. Manufacturing, see, the representation of the sectors which are likely to outperform over the next 5-7 years in the Nifty is far lower. Like auto is, auto and pharma are like have virtually no weight in the index. But if autos outperform next 5 year or manufacturing outperforms, they could run at a faster pace than what the Nifty could run. So the Nifty representation is so overloaded in favor of financials that the smaller and the broader manufacturing side of the market could grow much faster in earnings.
At what rate do you expect your portfolio earnings to compound? Not the pricing, but the portfolio earnings to compound.
So if you look at our portfolio today for the next 2 years, CAGR is 25% earnings growth.
25%.
25%.
What are your top holdings?
Growth. Sorry?
What are your top holdings where you expected 25% CAGR earnings growth?
So we have everything from large, mid and small cap, Nikunj. Yes, we have NBFCs and financials at the top, but we also have consumer companies like United Spirits is part of my top 5.
The numbers are just
Varun
not
Beverages are top 5. And we have now stocks like Larsen, which are way up in the pecking order, right? Because we believe that the capital, both the government and private capex will play off. We have technology, mid-cap tech in our top 5-10, right? So we have, we don't look like the index at all in our top 5-10. And then over time we have invested in a lot of manufacturing companies, bearing companies, capital goods, power equipment, and so on and so forth. We think there the earnings could be much faster. And as I said, our weighted average portfolio earnings growth is going to be on top, ahead of 25% for the next 2 years.
Is L&T the only Nifty 50 company in your top 5?
No, we have others. We have private. We have ICICI Bank. We have Bajaj Finance and L&T. These are probably the three from the Nifty that we have. Everything else is outside the Nifty.
I